In New York. In for Emily Chang, this is Bloomberg Technology. Coming up in the next hour, the fallout grows over the Trump administration's order against Huawei. SoftBank's Arm Holdings has frozen business with the Chinese tech giant too. The US is also considering cutting off vital American technology to 5 additional Chinese tech companies. Plus, Qualcomm tumbled 10% after a U.S. district judge sided with the Federal Trade Commission on a case accusing the company of anti-competitive practices. And Amazon shareholders reject a proposal that would have limited use of facial recognition technology at the tech giant. We'll recap the highlights from Amazon's shareholder meeting. But first to our top story, and of course it's trade. Just days after the US supply ban on Huawei, while the government is now weighing cutting off the vital technology flow to 5 other major Chinese surveillance firms. If carried out to its full extent, the US government's blacklist could temporarily hobble these sorts of tech companies in China. And of course, Huawei in particular relies on parts and software from American companies such as Qualcomm and Google to build and market the 200 million mobile phones it ships annually, as well as US-made equipment, but by actually other international firms like Arm Holdings. It's a global supply chain issue. To discuss this, let's bring in Bloomberg's Sarah McGregor in Washington, and here in New York, Bloomberg Technology's Garrett DeVink. Sarah, I want to start with you. How much is this ratcheting up tensions? How much was this expected that it would move past just Huawei?
So, of course, the concerns by the U.S. about Chinese technology companies perhaps violating sanctions laws or using the technology to spy in America, this predates the trade wars, the Trump administration. But, of course, it's all coming at this very precarious moment where trade talks are essentially at an impasse. There's no further talks planned between high-level officials, and it looks like Trump and Xi themselves might need to hash out, whether they can come up with a deal when they possibly meet at the end of June. And so, I think some of these, the blacklisting of these Chinese telecommunications companies coming at this very moment seems probably very suspicious to China right now. It probably looks like the U.S. is using that as leverage in the trade talks. The U.S., of course, says they're 2 separate tracks.
2 separate tracks, but with very wide-ranging and global impact, Garrett. I'm reading a story at the moment by our colleagues Olivia Carville and Jeremy Kahn saying, look, these sorts of video surveillance giants, 2 of them actually make up basically 1/3 of the global market of video surveillance. All of London's subway system is made by these Chinese-made video cameras. A lot of them work here in the United States. You cover Google in particular, which is a supplier to Huawei. How sprawling is the effect?
Well, I mean, I think when you're in the U.S., when you're an American, and maybe if you don't travel that often, you don't see the name Huawei very often. You don't necessarily see the phones out and about. You don't see the laptops out and about. But if you go to any other country, and I'm not just talking about China, I'm talking about Europe, developed countries, and of course, all the developing countries around the world as well, Indonesia, Nigeria, these massive smartphone markets, Huawei is a major brand there, and it's sort of seen as a global champion for China. They have good technology. The phones work well. They're much cheaper than Apple's phones. And most of the phones that Google makes or other U.S. companies make. And so at this point, I mean, it's a very direct attack, and it's one of the few cards in terms of really going after these Chinese corporate champions that the U.S. can play by cutting them off from the U.S. market.
Garrett, how hard a hit is this to Google and its focus on the operating system Android and its perpetuation globally, perhaps not here in the US, but Huawei is the 2nd biggest smartphone maker. It was obviously making it the most used operating system. Is that at risk?
I mean, absolutely. I mean, so there's the Android operating system, which is open source that anyone can use for free, but then there's all these services that Google does sell on top, and that's what they're not allowed to sell to Huawei anymore. So it's a blow to Huawei because the phones will be, future phones will just have, much less functionality if this isn't able to be sorted out. But it's also, it's true, it's a blow to Google. We don't know exactly how much, and of course Google sells to dozens, if not hundreds, of phone manufacturers around the world, but Huawei is obviously a major customer, and so I wouldn't be surprised if, the specific license fees was in the millions of dollars, and, that's sort of my semi-educated guess for, and at the end of the day, that's not a lot of money for a company like Google, but of course, if you fast forward this 3, 4, 5 years, and this, Cold War between China and America when it comes to technology just advances, any hopes from a company like Google to get deeper into the Chinese market, to sell more phones to, those hundreds of millions of consumers, more software to them, it gets dimmer and dimmer.
And it gets dimmer and dimmer, not just for the likes of Google, Sarah, but also Apple, which gets plenty of revenue, plenty of profitability from China. How much is there a worry that we'll start to see the Chinese consumer boycott, or indeed China itself start pushing back and not allowing these sorts of goods to be sold?
Absolutely. I guess the more immediate threat for a company like Apple right now is Donald Trump's sort of push right now to try and slap tariffs on every single item that is imported from China, which of course would hit your iPhones, toys, books, all sorts of things, clothing that come from China. And so for a company like Apple, they lobbied in previous rounds of tariffs to make sure that some of their products were left off the list. They were successful in doing that. They can, of course, make the same effort again and come to Washington and meet with Donald Trump himself. But, if the Trump administration is sort of bent on hitting China the hardest way it can possible, there might be a more difficult case for companies, even like Apple, to make. And I think that's where, right now there's a lot of eyes on how it might affect the price of iPhones for American consumers.
And what about the role of Trump here? And indeed, he rode to the rescue when it came to ZTE, as I call it, but ZTE, as Americans would say. Are we anticipating any sort of dial back? Are people bracing for that?
What's interesting is that Trump has mused before that, right now there's a sanctions case against Huawei and its CFO is detained in Canada. And that was brought by the Justice Department, totally separate from these trade talks. Yet Trump has mused that, he might be willing to let the CFO go, get off the hook, in exchange for a trade deal. And so I think, and the ZTE case again last year, when Commerce was able to make a deal with ZTE and get that company back in business after those sanctions that the U.S. put on it and basically brought the company to the brink of collapse. That always, I think, then kind of expands the idea that Trump might be using this for leverage in the trade talks. And I think, China probably won't take too kindly to that, given that these companies are basically the lifeblood of its future economy. It's betting on, innovation to become, the greatest economic superpower.
And we were just talking, therefore, Garrett, as how deep this trade war could go. What Trump has pushed for is that companies just simply change their supply chain, go to Vietnam instead of China. Now, Huawei, we know, has perhaps prepared itself for this. It's stockpiled. It's all right for the next 3 months. But how much when you talk to companies that you cover, is it realistic that supply chains can change in such a way?
Yeah, I mean, the companies are always, all about how diverse their supply chains are and that they can move things around very quickly. And of course, the companies have seen this coming. We've been talking about this trade war for months, if not, essentially since Trump, came into office. And so I think both on the Chinese side and on the American side, the companies have been making sure to find alternate suppliers. But I do think that it's interesting when you think about Google with their Android software, right, which, doesn't need to be manufactured at a factory somewhere, but they have this position where everyone uses Android, everyone except for Apple uses their software. And now if Huawei, even if there's a resolution to this, they've been stung really badly by this. They recognize how reliant they are on American software, and so they've talked about building their own ecosystem, their own operating system. That's a big challenge, but if they're able to pull it off, it does sort of chip away at the position that Android and Google is in, which is the default operating system for phones around the world, and that could have long-term impacts for Google.
Fascinating perspective, Garrett. We always thank you, Garrett DeVing, and of course Sarah McGregor in Washington for us. Now, meanwhile, Google is at risk of another hefty privacy fine under the European Union's strict data protection rules. Irish regulators have opened a probe of possible violations into how the search giant processes users' data in advertising transactions. In January, Ireland's data regulator became the lead authority to watch over Google's privacy compliance. Coming up, Qualcomm stock is taking a beating following the most recent antitrust ruling. What the decision means for the chipmaker's settlement with Apple, that's next. This is Bloomberg. Qualcomm shares fell the most in more than 2 years after a U.S. judge ruled the company violated antitrust law. Now, a U.S. district judge sided with the Federal Trade Commission Tuesday, accusing the company of abusing its dominant position in the market to squeeze excessive licensing fees from phone makers and strangling competition. Now, the chip maker said it disagrees with the ruling and will seek an immediate appeal. Joining us in San Francisco to discuss is Bloomberg's Ian King. Ian, how much does this go to the very heart, basically, of what Qualcomm's business model is?
Yeah, no, that's a very good question, Carolyn. this isn't just a nice little sideline for this company. We're talking billions of dollars of high margin revenue that come in every year, and that money is used to fund an industry-leading R&D effort, which gives Qualcomm the best chips in the industry. If you want to buy a 5G phone right now, or perhaps for the rest of this year, you're going to be buying a Qualcomm chip, and that puts this company in a very strong position. Threat to that is clearly serious, and that's what the market's reflecting today.
Let's get a market perspective now, because Bernstein senior analyst Stacey Rasgon is joining us on the phone as well. And Stacey, your perspective on the severity of the sell-off, is it in line with the severity of the risk to the business model?
In theory, yes, although I'm a little surprised at the magnitude, because I would have thought if you were paying attention to the trial itself in January, the idea that they were likely to lose was probably not going to be a surprise. That seemed pretty clear from the tone and mannerisms that emerged from the trial. Although I would say that maybe in the wake of the Apple settlement, investors were hoping that Judge Koh might go easier on them. It doesn't seem to be the case. And I think, as I just heard Ian say, it does actually go to the heart of the business model. And now the risk is that, we'll see what happens, like with the appeal and everything, but the risk is obviously that the fundamental drivers of that business model are at risk, given the remedies that Judge Koh has mandated here.
Yeah, as one of our colleagues, Shira Overday, wrote, it may reduce royalty payments, rewrite every customer contract, open up its trove of IP to rival chip companies. Ian, it's already rewritten its customer contract with Apple. Will that remain in place, or will that be some sort of standard bearer for what the contracts look like going forward with other companies?
Yeah, I mean, there's two things here. The first thing is there were no provisions that automatically triggered a recasting of that contract, of that agreement. That was some news we broke earlier today, so we're sure about that. But, back to what Stacey was saying, the judge in demanding remedies says that Apple has to go back out, says that Qualcomm has to go back out there and renegotiate any of its existing agreements, which are, based upon this bad behavior. So we really don't know yet, is the answer.
It comes at a very interesting time, Stacey, given the pivotal role Qualcomm plays within 5G, the race that we have seen between China and the United States, the blacklisting of Huawei. It all seems to be a pretty opportune moment for potentially even Trump himself to weigh in and in some way try and support what he hopes is going to be a beacon of growth for 5G in the US. Do you in any way anticipate government interference in this?
It's possible. I mean, we already started to see some government interference in this case. The DOJ had filed, a statement of interest a couple of weeks ago, essentially asking Judge Koh that if she found against Qualcomm, they were asking for another separate hearing to discuss remedies. And Judge Koh basically dismissed that in her ruling there. I mean, the judiciary is independent and she can do what she wants. Now, when Qualcomm goes ahead and appeals to the Ninth Circuit, maybe there's another opportunity there for some of the other governmental agencies to weigh in, Trump to weigh in, and maybe they'll potentially find a softer go in the appeal case. Call me in a year, though. I mean, it's going to take a while.
Yeah, and so from your perspective, with Qualcomm selling off as hard as it has, we're still seeing 19 buys on the stock, 0 sells. From your perspective and the rating that you have and the way in which you analyze the company, are you expecting some sort of bounce back in the share price?
I don't know. Again, the issue now is that if people had thought in the wake of the Apple settlement of the licensing that the overhangs on the licensing business were over with, and that story could emerge. Those overhangs, different overhangs now, but overhangs are now back. And if you're worried about the licensing business, the rest of the story is an Apple-driven chipset story that doesn't really start to play out until 2021, which is a long ways away from now. And so that's likely to sit on it. And we'll see if it bounces back. And, we've done a piece of work about a dozen times over the last few years, the kind of the what's priced in note work. It's probably time to sort of start to revisit that again and sort of see what's priced in here. But I sort of understand what's going on. Again, if people wanted that licensing business to be free to breathe, and it's no longer free to breathe anymore, and now you're relying on an Apple-driven chipset story, that's a lot less attractive than maybe things looked, a week or two ago.
Bernstein senior analyst, great to get your context of the years. Stacey Rasgon there, and of course with his decades of experience, Ian King from San Francisco. Coming up, it's been 2 years since online publishing platform Medium launched its subscription business model, but is it paying off? We'll discuss next. This is Bloomberg. Now, the global tech community flocked to Toronto this week to attend Collision, one of the fastest growing tech conferences in North America. Now, the conference has quickly become a hotspot for startup founders, venture capitalists and tech executives, including Medium CEO and Twitter co-founder Ev Williams, who took the stage as a keynote speaker. Bloomberg's John Ehrlichman sat down with Williams to discuss Medium, it's his investment as well in Beyond Meat and the state of subscription services.
It's certainly not easy to do, but I think a lot of people, New York Times, everyone thought they were crazy a few years ago when they said people are going to pay. Financial Times, some other vanguards, and now, and even Medium 2 years ago, I think we got a lot of criticism saying, well, that'll never work, but I think everyone has now accepted two things. One is that the ad model, the ad-only model, really is hard to make work for quality information. And two, people will actually pay. People care about the information they consume. I think the challenge now is figuring out how to make that work, because I don't think it'll work for everybody. I think there's got to be, you need a lot of critical mass, and it's definitely hard, but we're happy with what we've seen.
While some people have been looking at the success with Medium moving to subscription, a lot of people have been talking about the success of this Beyond Meat IPO.
Yep.
Through Obvious, you guys
Yep.
obviously were an early investor.
Yep.
What was your reaction to the stock market debut of Beyond Meat?
It was very gratifying to see the world react. I mean, this is a company we invested in 7 years ago or so, and we were inspired. We helped lead the Series B. And we were inspired by the product, by the entrepreneur, Ethan Brown, who's currently still the CEO. But it's very niche. This is another thing that seemed crazy back then. And I still, thought a plant-based protein company going public, it seems, it seems soon for that to happen. And so the public reaction to that, I think, is very exciting. I think it's a reaction to people seeing that there's a new and a win-win technology. It's a technology, but it's in the food space, and it addresses major issues of climate, and I think it's exciting. I didn't predict that sort of reaction.
It does feel like if we think about like a business that you did build in Twitter, or whether it's Facebook or Google, what's going on right now, you got a big tech conference, everyone's excited, but at the same time, you just saw government leaders from so many countries come together to say, how are we going to curb hate online, and working in conjunction with those companies. So it does feel like we're at sort of a new point in how we're evaluating those businesses and what happens to those businesses. What's been your take on that?
Yeah, I think we are at a new point. I don't have a lot of clarity on what's going to happen with social media, for instance. I think there's been a handful of companies that have been the dominant players for a long time, and it's interesting. It's different than when we were starting to get excited about these companies 10 or 15 years ago and saying, oh, anything, there's always a new idea. Every week there's a new idea and we're going to take a new approach. I think there's a certain staidness to what's going on these days in terms of the companies. I think a lot of people are yearning for just a new way to think about things, and I think that'll come along, but I don't know what it is.
Medium CEO and, of course, Twitter co-founder Ev Williams there. Now, Amazon shareholders rejected a large slate of proposals at the company's annual meeting on Wednesday, ranging from renewable energy to equal pay. Among these included a proposal calling for restricted use of the company's facial recognition technology, as well as climate change resolutions supported by over 7,000 employees. Joining us from Seattle to discuss is Bloomberg's Spencer Soper. You were there. It can be a bit of a circus. Paint the picture for us, Spencer.
Yeah, so every year you kind of get this smorgasbord of protests outside Amazon's shareholder meeting in Seattle. Last year there were drag queens, performing. This year there were poop emojis, people dressed in poop emoji costumes. But the big distinction this year was that there were dozens of Amazon employees and many of them, shareholders as well, inside the meeting, pushing for climate change inside the shareholder meeting at Amazon, where usually all of the protest and momentum and stuff is outside. So that was the big distinction this year, and it's a turning point for Amazon in the sense that they're usually able to, keep employees to be quiet and not be so publicly vocal about changes they want to see.
Yeah, and particularly this was surrounding climate change, and at one point several people in the crowd standing up with white T-shirts on. It must have been something really to quite behold, but nevertheless, it almost seems as though Amazon took a relatively unprogressive step by turning it down, but they have made steps to become cleaner and more thoughtful about the environment, right?
Yeah, they've made commitments around renewable energy, and they're trying to do things around packaging. And what their employees are saying is that, you know, these little tweaks here and there that we're doing aren't nearly sufficient, and that we need to do much more. And even though their proposal got voted down, there's something nearly like 8,000 of them have signed this petition now pushing for change, and they're vowing to not give up and not go away. So I don't think that this issue is, Amazon can simply brush it aside.
It's going to remain on Jeff Bezos' plate, it would seem. What about the interesting controversy around facial recognition? Because this is something that we've seen outside investors or thought leaders worrying about, particularly the use on the border, for example. But there was a vote on that, right?
Yeah, there were two proposals around facial recognition software. One was to prohibit its sale to law enforcement and government agencies, and another was simply to have a broader discussion and conversation around the potential downsides, which Amazon rejected both of. Amazon's approach on this seems to be, as long as people are buying it, we're willing to sell it to them. They're willing to speak with regulators about potential regulation and things, but as long as it's a freewheeling market for that software right now, Amazon's just ready to sell it to anybody. It's going to be up to government to step in and issue some sort of regulations around its use.
I mean, it's perhaps unsurprising that one of the wealthiest man, if not the wealthiest man in the world, helms over a company that is pretty capitalist in its viewpoint. But it's quite a distinct viewpoint from perhaps the growing changes that we're seeing in terms of employees at Google and in terms of Facebook. How much do you think Amazon's going to be forced to change as the activism grows louder?
Well, that's a great question, and one of the things I was asking some of the employees outside today who are participating in this activism was, do you feel threatened? And that was a common question among other media there. Do you feel threatened? And many of them don't. The critical mass of them is so big that they feel strength in numbers. They don't see much downside risk to participating in being vocal about this issue that is very important to them. And let's not forget the tight labor market gives them a lot of leverage. So it would be very, if it was a small handful of people, any big company can, whether it's, good or not, can find a way to get rid of them. But with thousands of employees in a tight labor market, that would be very difficult for Amazon to just hush them down.
Spencer Soper, great to bring us your first take of the Amazon shareholder meeting. Now coming up, the US blacklisting Huawei could backfire for tech giant Apple. What it means for already slowing Chinese business. This is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde in New York. Now back to our top story of the day. The US crackdown on Huawei could make Apple's already troubled business in China even more difficult. The iPhone maker could take a big hit if China decides to retaliate against the US. In fact, Goldman Sachs estimates that a Chinese ban on the sale of Apple products could cut earnings by 29%. To discuss, I'm pleased to say we're joined by Loop Ventures co-founder Gene Munster, and in LA, it's Bloomberg Technology's Mark Gurman. Mark, you had a really well-read piece out on the Bloomberg today talking about that Goldman expectation, the worst-case scenario. But actually, even without a retaliation, could we see some sort of boycott? How much could trade tensions already be hurting the Chinese business?
Yeah, we think there is going to be an informal boycott of sort. When there's an America and China is not really fond of America right now and the Trump administration and these tariffs because of how it's going to impact their economy. And when these types of things happen, you see them sort of latch on to their own brands. Huawei, in many respects, is the Apple of China. It has been called that by many people. People love Huawei there. So if people are going to choose in China between an iPhone or a Huawei device, they might lean towards Huawei just because of the tariffs in this trade situation, and specifically what's going on with Huawei right now with this impending U.S. ban.
Gene, as someone who's running these numbers, we've heard Tim Cook before sort of blame the slowdown to a certain extent about laying it at the feet of trade tensions between the US and China. How real a threat do you think this is going to become in terms of the bottom line for Apple now?
I would agree 100% with what Mark is saying about this boycott Apple campaign that indefinitely is going to start in China. But I want to put to rest some people's fears around a trade tariff from Chinese putting that on Apple products, like what Goldman was talking about. I think that is unlikely. We have recently spoke with people, former U.S. trade officials, and I think what's most important here is even the people who understand the intimate workings of how these progress don't know how this is going to play out. But one thing that has been reiterated to me is that Apple is an important partner for China. Approximately in total, about 3 million people's jobs are impacted by Apple in mainland China. So I think that even though that captures a good headline about a tariff, I think it is unlikely that that in fact will happen.
Interesting perspective there. Mark, from what you're seeing at the moment in terms of Apple trying to preempt, we know that Huawei's already preempted this. They apparently have 3 months worth of supply. They managed to pre-order and ensure that they've been stockpiling. Has Apple been looking at changing in some way its supply chain? Can it? It's such a juggernaut and China is so important.
I think if Apple was going to shake things up in terms of its supply chain, it would take a matter of years, 5 to 10 years for a full transition. Apple's manufacturing in China is not as simple as popping iPhones out of China through Foxconn and then shipping them out elsewhere in the world, all the way, to the United States and elsewhere. It's this vast network of suppliers, not only in China, but in Taiwan, Korea, other parts of Asia. Some stuff comes from the US, some from Europe, pretty much all over the world, that is then sourced and funneled into China for final assembly. So it's so much more than just one factory or one, as they call it, a city in China to build these things. It's a vast array, and all those moving pieces pretty much is going to make it impossible for any significant changes in the near term to occur.
There is potentially some silver lining, just maybe, and it's the element that Google's Android operating system is going to be hit to a certain extent by no longer being able to do business with Huawei. Is there any way in which international demand outside of China could pick up for Apple smartphones if the operating system of the higher-end Huawei's in some way is hit?
Yeah, for sure. Apple is not as strong as some of the other makers outside the United States. In the US, Apple is obviously the strongest provider, but in China we see a proliferation of Chinese brands there. But in Europe, Huawei has a strong stronghold there. They have about 20-25% of the market, according to some of the latest statistics. So if Android is going to go away, it's going to make those Huawei devices less appealing to consumers, and some customers are going to look for other devices. And if you're in Europe, you might not be going for those Chinese brands. You're going to look at something like an iPhone. So I think from that perspective, Apple has a lot of positivity there. I just don't think it's going to move the needle. And to Gene's point earlier about what the overall impact to Apple will be, you're going to see a little bit of a negative impact to Apple in China, but you might see that positive impact happening in Europe and other regions. So at the end of the day, it's very plausible that this will just simply even all out.
Yeah, Gene, net this out for us. Is there going to be some pro for Apple that's now able to offset the weakness that we therefore see in China?
I think Mark has a good point. There's some opportunities, but I just want to net this out here. What's going on in China is a net negative, but it's not nearly as negative, I think, as people are expecting. And if I was going to try to put this in its most pointed terms, is that mainland China is 10% of their business. That may be impacted by a few percent. They might pick up a percent in other parts in the country. So think of this as probably a 1 to 2% headwind to revenue. This is not a 25% risk.
1 to 2%. Great netting out for us. Gene Munstein, pleased to say you're going to be sticking with us. And Bloomberg's Mark Gurman, great analysis, great stories out today as well. We thank you. Now, contactless payments are coming to New York City subways and buses. At last, I say, having had them for ages in London. Passengers will be able to tap their credit card at special turnstiles. And Visa CEO Al Kelly spoke with Bloomberg's Emma Chandra about the company's partnership with the MTA to bring the tap-to-pay service to New York.
Well, from our perspective, to the degree we get people in the habit of using the card when they tap to pay using the MTA every day, They'll use it for getting their coffee. They'll use it for paying for their dry cleaning. It will get them into the habit of using it. And cash is expensive, and it's a hassle to carry, and you got to go to the ATM to get it. If you can just get used to using your card, it's the best way to go.
And so for Visa, this is a way about getting people to use less cash really and use your card more.
Absolutely. I mean, for us, it's a very important initiative to try to make sure that people are using a card, which is a very secure way to go, versus just using cash and carrying a lot of cash.
Al, what's the definition of success for Tap and Pay? Let's look a year into the future.
I think the definition of success is momentum. The reality is that consumers are starting to adapt, awareness is up, the number of cards in the marketplace is growing, and the number of transactions that are facilitated by Tap and Pay is in fact taking off. So to me, it's not about a specific absolute number, it's about momentum.
You can't give us a specific number though, perhaps?
Well, I think I would expect us to have half the MTA rolled out within a year from now, maybe more. I would expect at least 150 million cards, maybe 200 million by this time. But it's not about the cards, it's about how often people are using them, and that's the numbers we'll be watching closely.
Coming up, Tesla remains under pressure as Citigroup joins the bearish sentiment growing around the electric car maker. We'll have more analysis from Gene Munster ahead. This is Bloomberg. Twitter has been experimenting with advertising, increasing the frequency of ads, I've certainly noticed it, and adjusting the targeting in the feeds of some users to hope of generating feedback. The move comes at a time when its monthly user base has been shrinking. Let's talk Tesla, of course, their shares falling for a sixth day in a row, sliding nearly 6%, trading at its lowest level since December 2016. This as Citigroup lowered its price target to $191, highlighting what they say is negatively skewed risks and lingering demand, as well as cash flow concerns, adding to the bearish sentiment around the stock. Still with us, I'm pleased to say, is Loop Ventures' Gene Munster and Bloomberg's Craig Trudell joining us here in New York. Craig, I'm looking at analyst recommendations on Tesla. It's an amazing chart because overall it shows that negative, like the sell rating, hasn't increased that much in terms of the red barometer there on the graph. But what has plummeted is the price in the yellow line. Look how much the share price has declined in Tesla. And actually, you're looking at the 12-month price target. It's not really keeping pace with that. Are we starting to see, do you anticipate that catching up at some point?
Yeah, I think that spread, as you can see from the chart, suggests that for all the piling on that we've seen the last few days, we maybe still have some more to go, that there are still some folks on the street who are too high with this stock, and that's problematic just given what the Citigroup analyst said this morning, that sentiment is a real problem right now. The big concern that he flagged and that Morgan Stanley flagged, that Evercore has flagged, all these analysts who have stepped up to raise concerns about this name is demand. This is a company that was having real production problems last year. This year, the big story is deliveries and them not being able to sell as many Model 3s as maybe Elon Musk sort of suggested there was demand out there for. And the Model S and Model X are a little bit long in the tooth and very expensive, and that's causing real problems for deliveries and what has everybody sort of freaking out about this company right now.
Gene, yeah, Morgan Stanley saying, look, actually, in a way, they're too early to the party. We haven't seen demand for EV catch up. They're saturating the market. Do you agree with that? Is demand going to eventually play towards Tesla's strength?
Eventually it will, and I think it's important to stress that I am a believer in Tesla. I think that they will, in fact, turn the corner and capture what will be a juicy growth curve around electrification of vehicles. We're at 1 or 2% today globally. Eventually that's going to be 100%. But 2019 is going to be a difficult year. The demand question is quite critical. They're going to miss their numbers, their target. Everyone knows that. But I want to really focus in on what's happened in the last 3 weeks around the story, is that the stock is down 27%. It's down 24% since May 5th, when Trump tweeted twice about 25% tariffs. So there has been an acceleration on the downturn in this stock based on what's happened in the last few weeks. You mentioned analysts have largely not changed their opinion. The reason why the stock has dropped is ultimately, this gets back to the demand, is that the China piece is now more in question. And I think that there is risk. This is different than Apple. I think that there is risk that Teslas are tariffed going going into China. And separately, I think that there can be some consumer backlash against the China brand. But China is probably was expected to be about a quarter of the sales for this year. If that number gets down to 12%, then there's going to be a little bit more dramatic miss. And I think it's investors getting comfortable with that China risk that has really thrown the stock into a tailspin more recently.
Has it fallen far enough, therefore, Gene? I'm looking at a news story just being posted by Dana Hull with analyst Adam Jonas, once again from Morgan Stanley, being quoted saying, overall, Tesla is no longer seen as a growth story. It's seen more as a distressed credit and restructuring story.
In the near term, I don't know. The next 3 weeks to 6 months, I don't know what the stock. I think it's going to be a difficult year. I think the stock could trade lower during that time. I think that this is not a distressed stock story. I think that this company, there's just so much emotion around people who are following this. I think stepping back from the emotion is there's the electrification, there's an autonomy piece that I think are very important. And I think that ultimately, with all of its flaws, I think that this is not a distressed company. They have this recent raise of cash, this $2.7 billion. That will get them an extra 2 years of runway at about a 300,000 annual run rate, which is essentially the revised estimates now. So this is not, distress means you're at risk of going out of business in the next year, and this is not at risk of going out of business.
Yeah, we're just looking at Tesla's free cash flow there. Craig, your perspective on the autonomous part of the equation. I was speaking to the Needham analyst yesterday who was talking about how some of the safety records on autonomy makes it unfathomable that we're going to get those robo-taxis in the next year or so. What is the autonomous equation from your perspective?
Right. I think you heard Gene talk about the concern of China. Another one that I'll maybe throw out there that's also come into play and helped sort of fuel the selling has been this issue of another fatal crash in a Tesla involving autopilot, where the NTSB came out with a preliminary report last week. It was very similar to an incident a couple years ago in a Model S, where a semi-truck was crossing the road and the Tesla didn't pick up on it, and a person was killed. And so, Elon Musk has tried to sort of, take people's attention away from demand and the delivery issues that the company has been having, and talk about this future of robo-taxis. And he's really sort of undercut in terms of being able to make the case that we're on the verge of this robo-taxi future, when it's sort of a case of deja vu all over again of someone tragically dying in an incident involving autopilot.
Gene, very quickly, has Elon got to be more transparent?
No, I think he just needs to be more judicious about what he says and set better expectations at the core. And unlikely that we're going to get that anytime soon. So whatever he says, dial it back by 40%, and that's probably the right answer.
Nice rule of thumb there. Gene Munster and Craig Trudell, we thank you. Still ahead, Cisco CEO Chuck Robbins says he's not worried about the upcoming tariffs or the effect of the Huawei ban on 5G technology. That's next. This is Bloomberg. Now, since the US ban on Huawei, many are wondering the impact it will have on 5G technology. Cisco CEO Chuck Robbins spoke with Bloomberg's Carol Massa and Jason Kelly to discuss whether the ban could derail or slow the technology.
About 8 months ago, when all this began, our teams proactively started thinking about, and we actually made this statement that we have three parts of our strategy around this. One, we're going to continue to dialogue with the administration to try to influence the outcome. Secondly, we're going to optimize our supply chain because we have a globally distributed supply chain that we have the capacity to move things around on a regular basis, and our team does that as part of doing business. That's just what they do. And then the third was, if we can't mitigate it, then we'll obviously pass through pricing. And our teams did an amazing job over the last 8 months and actually put us in a position where the latest 25% really had a pretty nominal effect from a pricing perspective that we had to pass through because they did such a good job of optimizing our supply chain.
Is it more difficult, though, the longer this goes on?
Well, my bigger worry is if we move to the next phase, the concern is not necessarily for the impact on us at Cisco. My concern is more on the macro and what it does to customers' overall sentiment. That's the bigger concern for me.
And what are you hearing from your customers at this point? Because I feel like now, if we listen to earnings calls, we listen to interviews with your peers, they're starting to think about it, talk about it in a little more meaningful way.
Well, I hear the same things you're hearing. I mean, I heard we've seen some of the retail discussions that have happened over the last couple of weeks. So I think that the reality of companies' inability to optimize supply chain for whatever reasons, there are various reasons that they can't, I think, is becoming the bigger issue. Mm-hmm. And so the impact on either the company or the consumer is going to have a drag on the market if we don't, do something.
You've talked about diversifying your supply chain, and I'm assuming you've been doing that for some time. How much of your supply chain, though, Chuck, is still in China? Well,
we actually operate in over 10 different countries around the world, and we don't go into specifics because on any given day it could be any number. But we have, suffice it to say that the amount that is coming into the U.S. is subject to tariffs is nominal because that's what we talked about at the end of the day. But our teams do this as part of their jobs. I mean, they do this on a regular basis based on risk mitigation, based on where our component suppliers, the most cost-effective way to get the components into our supply chain. There's an element, obviously, of tax, and all of those things come into play as we think about how we line up our supply chain.
You talk about trade. We also think and talk a lot about Huawei. Mm-hmm. And one of the implications that everybody's wondering about is 5G. What impact does that have now? What impact does that have in the short term? How much do you worry that 5G deployment could really be derailed or slowed by all of these actions?
I actually don't worry about that. I think that there are multiple suppliers around the world who provide macro radio technology. That's what we're talking about. And then once you get off the macro radio, I mean, we provide most all the technology in the core networks for our customers. And so I think there are plenty of alternatives, plenty of good alternatives out there. And I think the bigger issue when you think about 5G and the deployments are the cost of capital to build out these networks, the cost to buy that our customers are having to face to buy spectrum, the regulatory environment, and what's the reality of the business model that they can build to actually get the ROI on the investments they have to make to get there. I think those are the bigger things that we need to be talking about and working on.
Well, and one thing I do want to also ask you is there's been a lot written that because of the ban on Huawei, that it presents or creates an incredible opportunity for the likes of you and others. I've seen a number of about $5 billion in terms of a global market. Do you see that ban on Huawei as an opportunity for Cisco?
Well, it's hard to say because, we focus on our innovation and working with our customers. And our customers in the large telcos and the large carriers around the world, they all tend to have multi-vendor strategies to begin with. So it's very difficult to ascertain when they increase volume with one versus the other, and what's the cause of that. And they typically wouldn't tell us anyway,
right?
Because they wouldn't want to give us any negotiating power. Right?
But I do think about 5G. I mean, this world so well in terms of the potential for it. And if Huawei is locked out of that market, I mean, once you start to create these networks and you are locked out as part of a piece of that supply chain, it's very hard to kind of change, right, over, bring in a different supplier. So I do wonder about the longer this goes on, does it create more of an opportunity for you guys? Well, because Huawei is kind of pushed to the side.
I think there are,
as the build
whatever the reasons are that a customer makes a franchise decision, because they do make franchise decisions. The big carriers have always done this. The large web scale providers, they make architectural franchise decisions. And then if you don't get into those, and this happens to us as well, then you're basically waiting for the next architectural transition for you to have an entry point. And I've talked publicly about the fact that we missed a couple of early waves in the web scale providers, and now we're having to work our way back in.
Right.
And I think that's just a fact of dealing in this space with these providers. So whether it's a security issue or whether it's a technology issue, if you miss a wave, then you're just going to have to wait for the next one.
How long are those waves?
Usually they're somewhere 5 to 10 years. I mean, they're
so you
big.
can be locked out for a while.
Right.
And
we feel it when it happens to us.
Yeah.
So.
Right. And when you think about 5G, I feel like when we talk to folks like you, we're talking about a massive leap forward in terms of the types of services, the types of things that we as consumers and businesses will be able to do. Help us understand what 5G looks like in our everyday lives.
Yeah, I mean, think about where you are today and what you can do with your mobile device versus what you could do, 15 years ago. I mean, we take it all for granted today, but I mean, the capabilities that we have in our pockets on these devices are just monumentally different. And this is no different. You're going to see a step change. And this one is probably exponentially even better than what we felt over the last decade or so. So when you talk about speeds of 4, 5, 6, 8, 10 times, I mean, the early use cases, I think, are going to be, my 18-year-old son putting his phone in the middle of a table and having 8 of his friends around, and they're playing real-time gaming as that's serving as a hotspot for them. But I mean, the reality is we should be able to deliver real-time healthcare into rural areas in ways that we haven't been able to. Getting speeds out into these environments because we can do it over spectrum as opposed to having to go pull fiber and run terrestrial circuits. Hopefully it will change the economics for our carriers on a global basis, deliver education into rural parts of emerging countries. I mean, those are the kinds of applications, in addition to IoT and all those things that are out there.
That was Cisco CEO Chuck Robbins speaking with Carol Masser and Jason Kelly as part of the Bloomberg Business Week Talk series. Now that does it for this edition of Bloomberg Technology, and a reminder that we're live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network too. It's at TikTok on Twitter. From New York, this is Bloomberg.